General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Hey, so options expiry weeks. S&P losing day in a row. Gold goes to 4,350. Yeah. It's the midweek. Let's take a look. Is this anchor solid? Well, for one, it hasn't been tested. Yes, this is still a weak low. I think the futures got higher than this. Nevertheless, let me change the color of this. I don't believe, it's hard to say I don't believe in Monday high, but this Monday didn't even take liquidity. Wednesday hasn't been tested to say it's a confirmed anchor. It's anticipated, but it did not create a swing and broke. Structure. I think it closed above though. Let's look at, so I know I was looking at 50%. Yeah, so we kind of closed at 50%. Looking to attack the sellers. Friday. So I'm bullish. No shift in framework hit rate. Bread and butter has been working better than weekly. Trade ideas, prices has been kind of ranging this month. So we still catch the base hits. And bigger swings on accident. No mistakes this week so far. Top frame context review. Midway through week 3, and so far it's still a very small range week. Which is usually the largest week. This week's range is about the same size as week 1. Hold on. It's about the same size as week 1 and 2. That's high. I would have expected bigger sales for options expiring, but it's too slow. It's too slow, and we're not aggressively seeking sell side. So I'm looking for buys now. The buys have been stupid slow though too. Expansion and mitigation signals. Let's look at the hour. Everything has really just been in a range. No, the structure is bearish. We haven't shown institutional order flow signatures that we bullish yet. It's currently high probability, low probability. It's been high. Considering time of year. Being good when focused on monthly expansions. Like the open or obvious trades. Stick to the obvious trades. Case study vol reference. Nothing's really interesting about this enough to have a case study. It's a very dull week. Today's the 18th. Let that page load. Put this in the truck. All right, let's see. 15-minute delivery. Like we gapping up. Also created the low, which is weird. Monday's high is weird too. So this is expansion. Engaged day. It's high. Everything lined up because we had news. Let's see if it's confirmed here. This breakaway here. Control. Let's go. It's not confirmed. I mean, not retested, but institutional order flow signs. IOFED. Thinking it's gonna be Wednesday, and expansion is playing out. No. This is what we was looking for, the buys. I'm gonna stick to the plan. What I learned about myself. I'm happy. What will I watch for tomorrow? I'll look for some buys. Let's go here. This is interesting. I seen it in London, and shoulda, woulda, coulda. I seen this, not this per se, but I seen this, and I'm thinking maybe it don't have to come here. Because I was thinking at least get a retracement, but after we start breaking above levels like PM session and riding it, this is saying we not want to come back. you know, touch and go. And you see we building more. It's just was ways. Let's get the chart link. So far, it's looking like Wednesday maybe reversal. Know how price is ranging. We can't expect much until we leave or till we get above Thursday high. This is ugly. Let's see on the hour. That's a flat top there. I like that. This gap hasn't even been tested. Like we finna come there now. Let me mark this. Because I can put alerts on boxes. Let's see if it lines up with OTE or if it's even in discount. I'm going to go from this low for the larger swing. So it's kind of around 50%. OTE is kind of at the order block. So I'm not going to put no alert there. The alert will have to go here. Just because that's the OTE line. And that's the discount. Yeah, I like buys. 50% of here would be my validation. Looking about retracements here. My ideal target would be Monday's high. Let's see if bonds are pushing. Oh, here. Okay, bonds are down. Yields are down. Dollars up. Nah, dollars not up. Dollars retracing. Bonds are turning around. This does look interesting for bonds too. Okay. They come on the daily now. Let's go to the daily. Nah. I'm gonna say this don't even look right. There we go. We still don't got no new candles. Now this is interesting now though, because we got an inside bar up candle. Thursday's an inside day. So that means it's not even a real expansion day. Like we can expect a real expansion day after an inside day. Or we can expect another inside day. Usually it's another inside day, but we'll play both sides of this. So this would be a sell idea. We push up here. This would be the sell to here. So now we're looking for big buy. But Mondays might not be the final objective. Might have to take both sides, parent bar, for continuation. Silver's been crazy. I think I've been paper trading terrible. But I thought I've been leaving the market after Nasdaq. The field of played up. Now silver retraced, still respected the first gap, and came to that internal range liquidity we was looking for. So it's good not to take days off on the charts. This is a nothing day for it to be CPI. Makes me think about time of year and old scraps of data. Let's not feed in the market its usual dose of highly relevant information. Scraps. H1. like we tapped previous week's high too. Really no need to go down. If we go down, we might as well go here. Because Monday's low is a week low all the time. Mm-hmm. Slow day. The test previous week's high makes me favor the buys. Retesting previous week's high. Thinking chop on Monday low. Or closing through. So we got us an inside day here too. Yeah, I'm thinking buy. Previous week's high should be good enough. In favor buys here. Like we just took a day to rest. Previous week's high looks good enough for liquidity exchange. See what EU doing. Man, EU didn't do anything. See here, today was pretty much a nothing day. I'm surprised it's so dull for CPI. It's usually nice in the winter. This is definitely old data. Old delayed data damage. probably didn't do anything on the H1. Yeah, look at this. Nothing day. It's such a nothing day. Even the move for NASDAQ, like if you didn't catch it, you was struggling to get them points. Price just chops it. That's it. Virgin revert. Day type. But uninteresting overall. And I know today wasn't on nothing. Just based on how the candle formed, probably a doji. Took out the day. Took out Thursday high. On Thursday high and dropped. But overall, stayed in the same range. All right, that's that on that. Y'all have a good day. Peace.